Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of PayPal, ticker symbol PYPL. And so it's pretty exciting to be going over this one because PayPal did report earnings on February 7th. I was expecting, because we put a close in on the day above $62, actually at $63.24, I was expecting price to go up following earnings because it was well above this yellow downtrending level of what I thought would be support. But on that day, it was red, going down about 0.74% on the day. So not good that it was red, but following earnings, we did see a pretty big drop, gap down more than 11% into the next day. Opening at a price of $57.98, but then closing at a price of $56.13. And so I was expecting this to continue down and potentially to fill this gap at right around $54.72, potentially continuing lower to fill this second gap at $52.20. But what we actually saw on Friday was a nearly 5% move on the day, going up to and closing at a price of $58.91, reclaiming a good amount of the loss from the day before, however, not putting in a bullish engulfing candle, and also putting in a close not only below this orange downtrend, which has served as resistance in this larger scale falling wedge pattern, which I expected to be bullish, the price to be breaking out well above the top of the channel, potentially going up to $72, $72.50, but we did not see that, unfortunately. I do think it is pretty interesting that the high of the day on Friday, February 9th, was at a price of $59.22, nearly perfectly corresponding with this Fibonacci level that I went over in last week's video, the 50% retracement at a price of $59.23. So pretty cool to see it bump its head at that level, but also a little discouraging since it is below the orange downtrend. And so what I see moving forward into the future is that the price is going to have a tough time not only getting above this orange downtrend, needing strength to get above that, but then also requiring strength to break back above this yellow downtrend in order to get back to where price was before earnings. And so I should note that in order to get where price was before earnings, there would be a gap fill that would be coming to a low on the day of the 7th, being at a price of $62.85, where that blue line is now magically. And so, yeah, we do want to be returning to that level, and I do think we could be getting a gap fill. But since we do have these two downtrends that we need to break above, I think it's going to be pretty tough to get to fill that gap, especially because we also do have this other Fibonacci level, the 382 at $61.35, has acted as a good amount of support prior to earnings. If we do throw up that volume shelf, it does look like there's a good amount of volume, a good amount of price action that's going to act as resistance now below these levels and this consolidation. So what I do feel is more likely is a return to these lower levels to fill these gaps, potentially finding support at $54.09 at the 786 retracement here. But, that could also break and we could be returning to fill that lower gap. And so other levels that do stand out, I do find it pretty interesting that the 618 at 5711 corresponds pretty nicely with this red dashed line, that we did get a break below that, but then we did return above that level. So I do find that pretty compelling, but I do want to throw up another Fibonacci retracement that I do think will correspond pretty nicely with some of the price action that we have recently seen. So I'm just going to do that retracement from the high here on September 15th down to the low on October 27th. And I'm actually going to color that retracement yellow so it stands out against the other one. And so from that, I find it really cool that the 382 at a price of 56.16 does seem like it acted as support following the big drop. We did get a close on Thursday, February 8th, at a price of $56.13, being just a few cents below that level, but then opening up the following day exactly at that level and then moving up nearly 5% on the day. So I do think that is pretty nice to see that that is acting as support, but I do think that we are going to have a tough time, like I said, breaking above these downtrends. And I do think ultimately we will be at least filling this gap right around $55. So do keep that in mind. But I do think that if we do fill that gap, we could be finding support just below it, not only at the white 786 retracement, but also, having a confluence with this other level, the 236 at a price of $53.90. So I do think it's going to be pretty important, pretty key for us to be opening above this 50% retracement, the white line, at $59.23. If we can get a couple closes above that, I do think that could suggest that we are going to break above the orange downtrend and potentially make a move towards the yellow downtrend, ideally breaking above that around $61 or at this white retracement at the 382 at, again, $61.35. But if we can't break above those levels, I do think that we will be returning to the downside, ranging between $54 and $55, if not lower. So do keep that in mind. But also, I do think that there is quite the possibility that this drop that we saw was a fake out, and we could be making our way back up to fill the gap, because after all, their earnings were strong. It just seems like there's going to be a lot of pivoting this year. And so, with that, stock price might not be going up so much, and it seems a little conservative for the year of 2024. But I do think there's a lot of potential for the years beyond and perhaps the second half of the year. So do keep that in mind. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.